Let's go.
Okay, what's up, fail-safe investors? Welcome back to another video with, of course, talking about stock and how to become financially free and live your life and do things that you enjoy and make your money work for you. So I just came in from enjoying my day, another beautiful day in Georgia, in Atlanta, another beautiful day. You know, I enjoyed myself. So that pretty much got me to thinking a lot of people really want to enjoy their life while also making money in the stock market, right? So I thought of a strategy that anyone can apply to themselves and pretty much make their money work for them. So this is a pretty much easy strategy. So there are a couple ways to invest, or investment strategies I should say. So the two most common is dollar cost averaging, which I have talked about in previous videos, and the second one would be buying the dips. That's what it's called, like buying the dips. So buying the dips is waiting for like some type of market correction, some type of market crash, or when a big dip happens, you pretty much have your money on hand and is ready to buy at the bottom. Now, the thing is with buying a dip, you would have to perfectly time it, meaning you would have to know exactly what the market will bottom out at, put all your money in, and pretty much know that the company that you're investing in will recover, and that this is something that, you know, the company and the stock market as a whole will recover from. Now, when you put that up against dollar cost averaging, in my opinion, dollar cost averaging wins out every single time. So dollar cost averaging, if you haven't watched my previous videos, dollar cost averaging is when you take a certain amount of cash and you put it into the stock market and put it into the stocks that you want to buy consecutively, consistently, and pretty much every single month. And whether the price goes up or the price goes down, you're not concerned about that, because in the long run, you are expecting that stock to grow. So with dollar cost averaging, it's all about building out your position, is what I would say. What I use is dollar cost averaging. So a way to make investing easy and make investing work for you, I would recommend dollar cost averaging, and I'm going to show you in this video how to make dollar cost averaging work for you, so you can be out and enjoying the weather and enjoying the day, or enjoying some time with your significant other, or whatever you like to do in your spare time, right? So with dollar cost averaging, let's say you use apps like Fidelity, Robinhood, TD Ameritrade, E-Trade, any of those apps. You can set it up to where those apps get a direct deposit from your bank account. So once you set this up, you don't ever have to look at it ever again. You don't have to check your portfolio, anything. So we're going to say that you set up these accounts to get a direct deposit of a certain amount. We'll say $200 every month or every check. So that's $100 out of every check if you get paid bi-weekly, and that's $200 monthly. Or you could even up it and have $200 out of every check and have $400 a month, right? And then you could also set up those accounts to automatically purchase stock for you. So let's say you don't really care about any individual stocks and you don't know how to evaluate stocks and you're new to all of this, I would recommend that you invest in index funds or ETFs and pretty much let those balance your accounts out for you. So let's say you want to invest in the tech industry. There are certain tech ETFs that has a basket of tech stocks, and you can set up your account to direct deposit money into those accounts, and then you can set up the account to buy a certain amount of shares monthly of those ETFs or index fund. And like I said, once you set this up, you will not have to look at your account ever again. It's pretty much on automatic mode. And like I've mentioned in previous videos, with the inflation on the dollar and the way that the stock market averages returns about 7 to 9% of returns year over year, it's almost like you can't lose. So me personally, I've watched my account grow pretty much double, like, you know, 2 times in the course of a couple months. And like I've mentioned in previous videos, I only own 2 stocks. I only own 2 companies. I'm not really checking my portfolio daily. I'm not waking up and looking at it and saying that it's dipped too low or it's going up too high, let me buy more. No, I pretty much invest a certain amount every month, and then I personally go in and purchase the shares every month, not on a specific date or anything, but I make sure that I pretty much purchase those specific amount of shares or spend that specific amount of money monthly. Now, like I've mentioned, you could go the buy the dip route, but even with the buy the dip route, if that's, let's just say that is the route that you choose to take, you could pretty much do the same thing. Set up your account to have a direct deposit, have that money go into your account, and then when there is a market correction or a market crash or something like that, then you do the same strategy. You just pretty much put all of your money in instead of dollar cost averaging, where you're pretty much putting in small fractions of your money and you're not really worried about it. So if you think about dollar cost averaging, don't think about your total lump sum. If a market correction comes, just think of it as, well, I'm only investing $200 out of every check, or $200 monthly, $400 monthly, or whatever like that the case is. And how you pick that amount is based off of you. Like, what is your risk tolerance? So let's say if you're making over $1,000, monthly or bi-weekly, I would say if you're making $2,000 monthly, then you probably should be investing about $400 monthly, because your monthly expenses should be taking up all of your checks. And if you can't afford to do 400, maybe 200. And if you can't afford to do 200, then there is something that you need to fix with your expenses. I'm just being honest. So me, like I said, every check I take about $200 out. Don't go over that, but I'll take the $200 out after I've paid off all of my expenses, all of my bills, have money left over to go out and enjoy my life, and then I put $200 into my stock account. And then every month, no specific date, I just go in there and I buy a specific amount of shares. And since I only have 2 companies, picking which stock to buy isn't that hard. But I do recommend other stocks for you guys, for my fellow safe investors, and I do stock evaluations on other companies, and I do it for you to help you out, so we can grow together. And if you do have any companies that you want me to look into, pretty much leave them in the comment section down below. You can DM me on Instagram at FailSafeWealth. You can DM me on Twitter. I'm on TikTok currently. I just got a TikTok thanks to you guys. And I am on Facebook, so I am on all social media platforms. I will get my LinkedIn up and going also this year, so I'm just working on trying to build out this page, build out this corporation, build this business that I'm trying to get going, and pretty much grow with you guys. Now, if this advice or if this information was helpful towards you, hit the thumbs up, because I do appreciate it, and I need to know that the advice that I'm giving you is helping you. And hit the subscribe button if you do want to follow the page and support the page and help me out as I go on this journey. So yeah, pretty much to sum it up, if you want to make your money work for you and you want investing to be made easy, dollar cost averaging is an easy strategy that anyone can do. And like I said, once you structure it to where your direct deposit is going into your account, and then you have your account set up to automatically purchase a certain amount of shares monthly, once you know which stock that you want to invest in, that is pretty much the hard part right there. So doing the fundamental analysis on the company is the hard part. Making the purchase is the easy part, and I'm just pretty much helping you get to that point where you can make those purchases easier. And let's say, it slips your mind, you're too busy enjoying life, you're going on vacations, you're doing what you enjoy, and it slips your mind, you can have that account automatically set up to just make the purchases for you. So that's a strategy that you can pretty much put into like your portfolio and let it just work for you. Like I said, if you don't want to invest in individual companies and you want to be lazy, let's just say, sometimes I want to be lazy and I might not want to do the full research on the company, so I'll just invest in an ETF or index fund and let them balance it out. So like if I want to invest in the tech sector, I go find an ETF in the tech sector, and let's say a certain company starts to fall off, then the ETF will balance out that portfolio for me, and I don't have to worry about it. I can just keep buying that ETF and get that pretty much return on my money. Now, that's pretty much all I got for this video. More videos will come. I am doing a video tomorrow also, so look out for that, on the DoorDash and Airbnb IPO. I have mentioned it on my social media platforms. If you're not following me on social media, please follow me on social media, because I'm giving away gems on social media, and pretty much it's a window into my life, and you can see me, what I do on an everyday basis, and just know that I'm a normal person just like you. And yeah, that's it. So get out there, structure that portfolio correctly. That's all you have to do. Let the money work for you. And until the next video, let's get it, let's do it.